The fundamentals are not healthy for oil. There's a lot of concern because there's so much supply out there with Russians, OPEC, and the Americans all pumping oil. And of course, there are concerns about global demand. Is the global economy starting to slow down? That's a big question because it would certainly influence the overall demand question for silver. Continues to be very noisy, and at this point in time, I think it becomes very dangerous. The futures markets are pricing in a lower price, which is something known as backwardation. Backwardation suggests that prices will be lower in the future. The gold market has rallied a bit during the early hours here on Wednesday as we have broken above the $4,200 level. The $4,200 level, of course, is a large, round, psychologically significant figure, but I can't make an argument for it being particularly important. Markets continue to show massive volatility. This is Chris from Hola Prime with your technical roundup. The gold market has rallied a bit during the early hours here on Wednesday as we have broken above the $4,200 level. The $4,200 level, of course, is a large, round, psychologically significant figure, but I can't make an argument for it being particularly important. Short-term pullbacks, I think, make a certain amount of sense, and that, I think, also gets looked at through the prism of a potential value proposition, mainly due to the idea that we've just come too far in too short of an amount of time. Central banks around the world continue to buy gold, though, and that is a bit of a permanent bid that will have to be reconciled. So I think the downside is probably going to remain somewhat limited in this environment. And with that being the case, I'd love to see a move down to $4,000. We'll see if we get it. It just doesn't seem to be willing to do so at the moment, but short-term charts might give you the path forward as well. When you look at the hourly chart, you can make an argument for $4,100 being important. And during the day, for the most part, after rallying, it looks like we're forming some type of pennant. I assume it probably signifies bullish more than bearish, just due to the overall attitude of this market. But quite frankly, we have gotten extraordinarily overdone in a fairly short amount of time, basically a month. We're up about 27%, so maybe a little bit of a pullback is necessary. Silver continues to be very noisy, and at this point in time, I think it becomes very dangerous. The futures markets are pricing in a lower price, which is something known as backwardation. Backwardation suggests that prices will be lower in the future, although there is a little bit of a skew here due to the fact that so many traders are out there looking for physical silver at the moment that the spot price is getting thrown around. That being said, I think this remains a buy on the dip type of market. I'd be interested somewhere around $50.40, and then again at the $50 level, followed by $48. Even though I think it's overdone, I don't really have any interest in shorting silver, but I will say this. Everything that I'm asked about recently is either gold or silver, and more specifically silver. I've never seen so many people interested in silver as I have in the last couple of weeks. And my career goes back something like 19 and a half years, and I've never seen this many people this excited about silver. That's not a good sign, by the way. Looking at the euro, we have rallied a little bit, but quite frankly, we can't hang on to the gains for any significant amount of move. The 50-day EMA sits right around the 1.1665 level. And as it is starting to drop a little bit, I think if we see signs of exhaustion here, it's very possible that we might have people looking at this through the prism of fading short-term rallies that show signs of exhaustion. If we can break down below the 1.1540 level, then I think the euro really starts to fall towards the 200-day EMA, which is currently parked just below the 1.14 handle. On a move higher, I don't know that I buy the euro, but I think it probably gives you a signal to short the US dollar against other currencies, maybe the British pound. The euro itself, I think, has a lot of issues, and quite frankly, when you look at it on a shorter term chart, it just seems lost. We are forming a W pattern on the hourly chart, but then again, you look at the daily and really all it's showing you is sideways consolidation. The 1.16 level could very well end up being a magnet for price, and maybe a little bit of short-term range-bound trading might be the way forward. The British pound has rallied to break the top of the hammer from the previous session. However, you'll notice that we are not hanging on to all of the gains above the 1.3350 level, an area that has been important in the past. It's a little bit of a sloppy range, admittedly, but at the end of the day, it is a range of support and resistance that's mattered. So I find it interesting that we're struggling. The question is, do we start to consolidate in this area, sitting just above the 200-day EMA? That's important because if we break down and lose the 200-day EMA, that technically means we're in a downtrend for a lot of traders. If we break to the upside, the 50-day EMA currently sits at the 1.3450 level. That could be your target. Anything above there then becomes rather bullish. Again, going back to the euro chart, if we see the euro rally, the pound should do quite well. We'll just have to wait and see because of the US dollar tending to move in the same direction against most currencies. So the US dollar has fallen against the Swiss franc during trading here on Wednesday, but it is respecting this previous downtrend line as potential support. For me, if we can turn around and break above the 0.80 level, that would be a very bullish sign and could send this market towards the 0.81 level. Ultimately, this is a market that I think could go looking to the 0.82 level, where the 50-day EMA is starting to move toward. Ultimately, this is a market that I think will continue to see a lot of bouncing around in this area as market participants continue to try to find a floor in the Swiss franc. Quite frankly, sooner or later, the Swiss National Bank will lose its sense of humor and get involved. I don't think we're anywhere near that now, but with a very weak and almost negative interest rate attached to it, the Swiss franc is something that people will only look to if they are truly concerned about the bigger picture. The US dollar has fallen a bit against the Japanese yen, but it does look like we are trying to hang on to the top of that previous rectangle at the 151 yen level. If we can bounce and break above the top of the candlestick, then it opens up a move towards the 153.35 level. Clearing that level opens up a bigger move, and it is worth noting that we have pulled back, and now it looks like we are trying to hang on to the overall upward momentum. There is a bit of a gap that hasn't been filled yet, depending on the broker you use. And if that's the case, then that might end up being a target if we do fall apart. But unless we get some type of massive risk off type of move, I think the US dollar will continue to do fairly well against the Japanese yen as you get paid swap in a positive manner if you hang on to this in a long position. The US dollar initially pulled back against the Canadian dollar only to turn around and show signs of life. And now it looks like we are trying to get to the top of the candlestick from the previous session. The 1.4080 level is an area where we've seen some resistance previously, but we are starting to see the 50-day EMA break above the 200-day EMA, which of course is the so-called golden cross. People really start to pay a lot of attention to that. It does tend to attract a lot of headlines as we are breaking through a large round signal. All things being equal, though, I think you've got a situation here where we have broken resistance. We are more likely than not going to try to reach the 1.4250 level given enough time. I have no interest in buying the Canadian dollar, and it's probably one of my least favorite currencies at the moment. The Australian dollar did rally a little bit during the trading session, but it looks like it's struggling to hang on to the gains as the area above the 200-day EMA continues to be a bit of a problem for the market. Also, you should keep in mind that the market has been sideways And I think this suggests whether or not the market is going to really move anywhere. And I think sideways action could make sense, but short term rallies end up being selling opportunities. The 0.6550 level is an area that is backed up by the 50-day EMA. Until we get above there, significantly above there, I'm a little bit hesitant to own the Australian dollar, mainly because it's underperformed against the US dollar for so long. And I think that ends up being the way forward. I think the Australian dollar continues to be fairly weak. The New Zealand dollar has gone back and forth during the trading session here on Wednesday, as it looks to me like a market that just can't pick up enough momentum. The 0.5750 level above has offered resistance a couple of times, and this is where we had bounced from previously. So there is a certain amount of market memory here. I do think this is a situation where we eventually break down. And if the New Zealand dollar drops below the 0.5681 level, that opens up a massive drop in my estimation. We are a little overdone at this point, so a bounce still wouldn't surprise me. But that bounce for me is a selling opportunity. I have zero interest whatsoever in trying to buy the New Zealand dollar right now because, quite frankly, global markets just do not warrant that type of behavior. We just don't have enough risk on behavior and anti US dollar sentiment to believe that is going to be where we go next. So, with that being said, I like the idea of trying to get US dollars a little cheaper after a bounce. And in that environment, I think you have basically exhaustion candles that you'll be looking for to get involved, or perhaps a breakdown of the hammer from the previous session. The euro has gone back and forth during the trading session against the British pound on Wednesday, as we are hanging around just above the 50-day EMA. Market participants continue to look at this through the prism of a market that I think looks at the 0.8750 level as a massive barrier. If we can get above that area, then I think we go higher, probably much higher. At the very least, you would look at a measured move of the recent rectangle, so that's 150 pips, bringing the market to 0.89. If we break down from here, underneath the 50-day EMA, we could go looking to the 0.86 level, where we've seen support multiple times. And I think this is a scenario where we are looking at it from a back and forth sideways situation. We're closer to the top, so I am looking to the downside. We'll just have to wait and see. The euro has been noisy, to say the least, against the Swiss franc, where they had tried to break down below the 0.9250 level, the bottom of the overall range that we've been in recently. And by recently, I mean since spring. We bounced pretty significantly, fell, bounced again, and now we find ourselves just scraping along the bottom here. Keep an eye on the euro against the Swiss franc because this is a good barometer on risk appetite. Rising with risk appetite, falling with risk appetite being decimated. Remember, the Swiss franc is a safety currency above all else. So if there are a lot of concerns, especially in the European Union, then this pair will drop. On the other hand, the converse is true as well. And if we were to be able to take above the 50-day EMA, then we could really start to take off to the upside. But right now, I think you see a lot of wicks, which tells me you see a lot of indecision. The euro initially fell against the Japanese yen during trading on Wednesday as well, but we have bounced enough to show signs of life. With that being the case, I like the idea of buying these short-term dips as potential opportunities and perhaps trying to run the pair back to the 177.85 yen level. even if we break down from here, I think there are plenty of buyers all the way down to at least the 50-day EMA, which is sitting at the 173.40 yen level. We're in a massive uptrend, and I think that continues to be the case no matter what. So, with this, I remain bullish. I look at pullbacks as potential buying opportunities, but I also recognize that you can't get overly aggressive in these markets because really it would only take one tweet to have everybody running towards safety, and safety generally means the Swiss franc and the Japanese yen. However, loose monetary policy is almost certainly coming to Japan, so I would anticipate that will be reflected in the Japanese yen given enough time. If this pair were to break down below 172 yen, then I think it completely falls apart. But right now, I just don't see that happen. This is basically a very anti-Japanese yen environment, and I think that continues to be the case. So this is one of the more interesting pairs to me at the moment, the British pound against the Swiss franc. After all, you have to keep in mind that the British pound definitely pays swap at the end of every day against the Swiss franc. And with that being the case, I think you have to look at this as a market that will be paying close attention to the 1.0650 level, which is the beginning of massive support. The 1.0650 level continues to offer support all the way down to the 1.06 handle. That 50 pip level certainly seems to be a hard floor in this market. And with that being said, I think you've got a situation where we are testing a major scenario of support that I think continues to play out. The question isn't necessarily whether or not the pair can bounce from here, but it's more or less whether or not it can hold first. And then I think you have a situation where the 50-day EMA becomes a major area of resistance. Breaking above that then opens up a huge move, I believe, maybe even trend changing. If we were to break down below 1.06, that's not only bad for this pair, it's actually really bad for risk appetite overall. We could plunge at that point. The British pound has initially fallen against the Japanese yen during trading here on Wednesday, only to turn around and show signs of life. The British pound dropping against the Japanese yen to test the 202 yen level, only to show signs of life. At this point, the market is likely to continue to see a lot of noise in this area. And I think if we can rally from here, we could go looking to the 205 yen level. After all, the Japanese yen is in serious trouble. And I think you also have to keep in mind that the market had been rallying ever since the election. And now that we have given back about half of those gains, I think you've got a situation where it's very possible that value hunters are starting to be interested in this market who would have missed the gap higher. And therefore, I think you have to look at this as a market that continues to see a lot of interest. And I just don't see how you short this market. If we do sell off here, the 200 yen level is an area that I think continues to be important, with the 50-day EMA backing that up as an important level as well. I've got no interest in shorting this market, like I said, and I think given enough time, we probably go looking to the 205 yen level, possibly even much higher than that. The Canadian dollar has broken significantly below the Swiss franc, and the 0.57 level is now giving way to what I think is just massive ugliness when it comes to the Canadian dollar. The Swiss franc is stronger during the day after initially selling off against most currencies, but the Canadian dollar is so weakly it makes quite a bit of sense that we would continue to see this thing drift lower. This might be the one thing that I think really causes major issues. Rallies at this point in time, I think you'd have to watch the 50-day EMA, which is basically at 0.5765. If we can turn around and break above that, that would be a major victory for the Canadian dollar. But in this environment, I just don't see the loonie strengthening, especially against the Swiss franc of all currencies. The Canadian economy continues to give us bad news, and I just don't see that changing anytime soon. As during the trading session, the U.S. numbers in the Empire State Manufacturing were actually a little weak. And that, unfortunately for Canada, means that demand might be suffering a bit. With that being said, I think you've got an environment where Canada just continues to ride the coattails of America, be it good or bad. Speaking of the Canadian dollar, we have fallen pretty significantly during the trading session against the Japanese yen. And now I think the 107.50 yen level is an area that we need to pay close attention to. The market will continue to be very noisy overall, and I think you have to look at it through the prism of one that's very volatile. The biggest driver of this pair is going to be the Japanese yen and not necessarily the Canadian dollar. So as long as the Japanese yen remains very weak, then I think you'd have to be a buyer, all things being equal. That being said, if this market does rally significantly, I anticipate that you'll get more bang for your buck, so to speak, if you're buying the British pound against the yen or the US dollar against the Japanese yen, not the Canadian dollar. But if this thing rallies, it shows you how weak the yen really is. The euro initially fell against the Norwegian krone, but did turn around to show signs of life at the 50-day EMA. And now it looks like we are trying to hang on to the 11.75 level. The shape of the candlestick does suggest that we are still somewhat bullish, and if we can rally from here, we could rally another 1.5% towards the 12 level. If the market were to break down below the 50-day EMA, then we may have to reset and go looking for support near the 11.6 level. The euro rallied against the Swedish krona, but the krona continues to fight at the 11.08 level, an area that's been both support and resistance multiple times, and should have quite a bit of market memory attached to it. With this being said, I think you've got a situation where you just don't have enough momentum to break out, but breaking down isn't really a thing at the moment either. I think we're just in a messy kind of sideways market right now, but with the 200-day EMA dropping toward the 11.08 level suggests that there could be a significant amount of resistance. The New Zealand dollar fell against the Japanese yen during the trading session, but is trying to stabilize. We are right around where the gap was, and if we turn around and rally from here, then I think it's likely that we could jump from here, perhaps go looking to the 50-day EMA, maybe even the 200-day EMA. The 85 yen level is a massive floor in the market, and I think that continues to be a situation where that's the floor. Keep in mind that the New Zealand dollar is, of course, pretty weak at the moment. So if the Japanese yen is starting to strengthen against the New Zealand dollar, you'll have to look at other currencies to see if it's worth shorting because the yen is so weak as well. If this pair starts to rally to the upside, then it's likely that the trade that you're looking for will be similar to the Canadian dollar Japanese yen situation, where you want to be a buyer, but you probably want to buy other currencies, not the Kiwi itself, because of momentum. The Kiwi initially did try to rally against the Swiss franc, but then crashed into the 0.4550 level. This is a market that's in a very strong downtrend, and I think will continue to be for quite a while. Short-term rallies are to be faded with the 0.46 level offering resistance, and I think there's even more resistance at the 0.4650 level. I don't necessarily think that this is a pair that's worth chasing, but clearly, as in the case of the Canadian dollar, if you can pick up cheap Swiss francs, that might be worth having a go at. The US dollar has been very choppy and sideways against the Mexican peso for this session as we continue to hang around the 18.5 level, an area that's been both support and resistance. So I think you've got a situation where we're just hanging around the 50-day EMA and trying to sort out what it is we are doing next. Ultimately, you have to keep in mind that this pair has a weird correlation in the sense that if the US economy starts to fall apart, it's actually the US dollar that performs better in this pair. This is because Mexico is the largest exporter to the United States, and its economy is heavily dependent on the Americans. The technical analysis does suggest that we have a lot of resistance just above, and as long as we can stay below, I believe, somewhere around 18.8, then you're probably still looking to own the peso. If we were to break above the 19 level, then I think the trend changes. But right now, we are light years away from seeing that happen. And therefore, I think fading short-term rallies probably continues to be the case, but this is going to be choppy to say the least. The light sweet crude oil market has had a miserable day. When I got up this morning, it was trying to recover, and you can see it just can't hang on to those gains. This is a market that has a lot of resistance near the $60 level that extends to the $62 level, and I think that will continue to be the story, at least in the meantime. The fundamentals are not healthy for oil. There's a lot of concern because there's so much supply out there with Russians, OPEC, and the Americans all pumping oil. And of course, there are concerns about global demand. Is the global economy starting to slow down? That's a big question because it would certainly influence the overall demand question for crude oil in most grades, not just the US or light sweet crude oil market. You can see that the area continues to loom large. So I think you still have a situation where short-term rallies that show signs of exhaustion are probably going to continue to be selling opportunities. The Nasdaq 100 rallied during the trading session to reach the 25,000 level and then found itself wanting yet again. This is a noisy market, and you can see just how the hourly charts have behaved. We rallied through New York, collapsed for really no apparent reason. I think that New York Empire State Manufacturing freaked people out. Then we're turning around right here. Can we rally into the end of the day? I don't know. I think really what you're looking at is probably going to be more or less sideways trading, which probably isn't that surprising considering we had such a horrific day last Friday, and now we are threatening a major large round figure in the form of 25,000. It makes sense that traders are a little bit hesitant. You can see how it repudiated the markets this morning. I think it's going to take some type of good economic news to get traders to push the Nasdaq 100 above the 25,000 level. And that might just be simply in the idea that the Fed's going to cut rates. It doesn't have to be anything life-changing. I just think we need some type of good news. The S&P 500 broke above the 6,700 level at one point during the trading session, but much like we had seen in the Nasdaq 100, we rallied and then we just dumped. This is a market that just doesn't have anywhere to be, and I think you have to look at it through the prism of a sideways market, but ultimately, I do think we go higher. The question is, how long is it going to take? I just don't know, so that's my answer. A lot of patience probably goes pretty far in this market. I don't have any interest in shorting. It's worth noting that the uptrend line is backed up by the 50-day EMA, and that has proven to be supportive based on the Tuesday and Friday candlesticks. So at this point, we're just trying to build up momentum. The Dow Jones 30 looked really good at one point during the trading session, breaking above the top of that Friday candlestick that was so horrific, but can't seem to really hang on to the gains very easily. So I think you've got a situation where we will eventually try to break to the upside, but we've got some work to do. Buying on dips makes a lot of sense, and it looks like the 50-day EMA is at least trying to jump into the mix and offer a little bit of technical support, if nothing else. It's basically acting like a trend line. And Bitcoin initially tried to rally. It fell pretty hard, and you can see we are right around the $110,000 level, an area that I do think will be very important. As long as we can stay above 110,000 or maybe even $108,000, then we have a real shot at bouncing. If we bounce, then I think your best case scenario is a little bit of sideways action as we try to build up confidence. I'm not a big fan of jumping in and buying a ton of Bitcoin here, but those wanting to dip their toes in the water will probably find this area interesting. The Ethereum market has been pretty negative during the trading session, and it does look like it's trying to drift a little bit lower. Not a big fan of Ethereum in general, but keep an eye on this chart. If it really starts to sell off, it could have influence in the Nasdaq and, of course, Bitcoin. At the end of the day, it looks like risk appetite is still a bit of a moving target. The US dollar is still somewhat stubborn, despite the fact that it's lost some strength. And of course, metals continue to be a very volatile place.
Hola Prime, trade with transparency.